Global markets have been mixed this morning, but the JSE has remained in the red for most of the day. The JSE is weaker ahead of the U.S. inflation data, which could point to how the U.S. Federal Reserve will respond through interest rates. Carmen Mpelwane is the portfolio manager at Sanlam Investments, and she joins us now to dissect the latest market moves. Thank you very much, Carmen, for your time. What's driving local and global markets today, as we've seen the rand come under pressure due to a stronger U.S. dollar?
I think we're seeing continued concern and risk off in terms of the expectation that the US Fed is likely to continue to raise interest rates. As you've mentioned, looking out for that inflation number. Having said that, the market is looking now for a peak of 5.4% in the US in terms of interest rates. Previously, the maximum or the peak was at 5%. So this has definitely been a fuel for a weakness in the rand going into this week.
The quarterly labour force survey shows that 169,000 more jobs were created in the fourth quarter of 2022. What does this tell you?
So I think the first port of call is to recognize that there's a lot of seasonal impact here. So over December, you would have seen an increase in terms of employment to cover for the increase in activity. Having said that, we still remain elevated in terms of the unemployment level and elevated in terms of pre-COVID levels. So we'll take the win, but it's to look what the trend is going to be starting in the beginning of this year. And so for the first quarter will be concerning. We hope that it continues to come down, but having said that, load shedding is definitely going to have an impact, specifically on the economy and therefore on employment. So it could go either way.
Here's something else that's going to be having an impact today, at least when we're seeing long queues at the petrol stations as the fuel price hike comes into effect tonight again. So what do we attribute this to, and which most sectors will be most concerned about the increase?
Yeah, so a big theme going into 2023 has been the focus on China and the reopening up of the economy. This, together with other global economic crunches or impacts, has led to a supply concern in oil. So we've seen the oil price stay firm. Adding on to that, we saw the weakness in the rand as well, and this has led to this increase in the oil price or the fuel price in South Africa. The likely industries that are going to be impacted is definitely logistics, number one. But I think it will be across the board, on the basis of people being very focused on backup power as we see load shedding increase, and requirement is for an increase in diesel as well. So it's going to have a widespread impact in terms of the diesel cost going up as well.
Right, let's take a look at news from WBHO. They've released their interim results. What are the highlights from their performance?
Yeah, so we saw revenue up 15%. Headline earnings per share turned from a loss to a profit. Having said that, management have guided that they've been very pleased with the increase in the order book, which is up 19%. Market seems to be neither here nor there on it, so share price marginally down about 35 bps today. Having said that, the order book improvement has come across all the divisions, so definitely looks like a good outcome for the company for the first half of the year.
Carmen Mpelwane, thank you very much for your time this afternoon.